Welcome back. If you just joined us, you're watching Newsnight. The Central Bank of Nigeria has recorded an inflow of over $1.5 billion into the economy over the past few days. It's a development the CBN says indicates that its monetary policy efforts are working. The CBN's director of the Corporate Communications Department says data indicated that the inflow resulted from the bank's effort to stabilize the foreign exchange market. The bank says the Naira has also continued to record gains in the autonomous foreign exchange market. Minimum capital requirements for banks, pegging the minimum capital base for commercial banks with international authorization at 500 billion naira. The new minimum capital base for commercial banks with national authorization is now 200 billion naira, while the new requirement for those with regional authorization is 50 billion naira. The central bank says the move is to enhance banks' resilience, solvency and capacity to continue supporting the growth of the Nigerian economy. All banks are required to meet the minimum capital requirement within 24 months, commencing from April 1 and terminating on March 31, 2026. I'm joined now by economist Dr. Justin Amase. He's a former head of the research team of President Buhari's Presidential Economic Advisory Council. Good to see you and thanks for your time. Well, this reminds us of the very big recapitalization that happened some years ago. But again, looking at what the CBN has done, first, make us have an understanding of what this would mean for our economy and confidence in our banking sector.
Thank you, Suleiman. The Nigerian economy has reached a point where every sector of the economy requires reform. And the new CBN governor, Dr. Cardoso, signaled right at the time he came in that he is ready to apply all the reforms that will be necessary on the side of monetary policy to be able to bring financial stability and to rebuild confidence in the Nigerian financial system. And he has taken quite a number of steps which, like you already pointed out, have started bearing fruit. The central bank has already fully paid all the unmet foreign exchange backlog on swap arrangements that were made and could not be met before his coming. The central bank has also fine-tuned other elements of the foreign exchange market. And now we have seen the dollar, coming down against the Naira. As of today, it has come down as much as about 1,300.
I'm going to come back to that so that you tell us some of the reasons why that is happening. But quickly, let me come back. I'm trying to, see a better understanding how easy we can get to understand the capital base for these banks. For instance, looking at the banks with national authorization, now getting to about 200 billion, and the requirement for regional authorization, 50 billion. When the bank speaks, about resilience, solvency, and capacity, this brings about confidence and trust on the sector.
Thank you very much. In 2005, when the previous recapitalization was done, the minimum capital requirement was 25 billion. At that time, the exchange rate, specifically at the time the recapitalization took off, was about 132 naira to the dollar. So effectively, at that time, 25 billion capital base translated to about 188 million capital base. Now, with the depreciation of the Naira, that capital base has been eroded significantly. In dollar terms, stands for about 18 million, which of course you know is very insignificant. So the first rationale for that policy is really to strengthen the banking system and to position them for that confidence that they can handle transactions both domestically and internationally. The second major reason is that the Nigerian economy has been facing a lot of risk. We have the geoeconomic, we also have the domestic risk, inflation, and then exchange rate depreciation itself. These are also major risks. And inflation, as you know, is part of what can erode the value of whatever financial assets you have. So inflation too has impacted negatively on the value of the capital of the bank, just like the depreciation of the naira. So what the banks themselves are facing is that they cannot comfortably expand their balance sheet in terms of the assets. In other words, there is a limit to which they can expand or book more loan without breaching the capital adequacy ratio prudential provision of the central bank. So the risk of banks not being able to meet the capital adequacy ratio if they expand their balance sheet is one of the reasons. This recapitalization will help them expand their balance sheet. At least the recapitalization for the commercial banks with international authorization at 500 billion translate to about $385 million. Of course, that may appear insignificant.
You know, the good thing is that you've been able to take us back to 2005 when we spoke about 25 billion recapitalization. But quickly here, are we likely to see mergers of some of these banks? Because you recall then, some banks were actually a little bit, for want of a better word, insolvent to actually meet the 25 billion capitalization. And we saw mergers, we saw takeovers. So with this new figure, what do you see?
Well, yes, you mentioned mergers in particular, but let me look at it from the broad perspective of the sources of capital available for them for recapitalization. Like the CBN clearly pointed out, the banks can either do private placement or rights issues or offer for subscription where they invite the whole public to come and invest. Then the bank can also explore the option of mergers. And similarly, the banks can even downgrade their licenses or upgrade them depending on their own capacity. So coming specifically to mergers, yes, there will be mergers. Because even for the top 5 banks, they have a capital deficit of about 2.something trillion based on the new capital requirement. So you can see that for you to raise 2.5, let's say 2.5 or 2.7 trillion just for the 5 banks within 1st of April to 30th of March 2026. It won't be that, because the capital market, the depth of the capital market is not, but there is also an option that could also make the banks that have international connections not to go into mergers. Because in the past 7 years, much of the foreign investment that has been coming into Nigeria has been attracted by the banking sector. And as you also know, the law does not stop foreign investors in investing in Nigerian banks. So that is another window that they can explore. But certainly coming to your question of mergers, yes. As at today, the only banks that have capital minimum capital base that can meet, that is within the framework of the specification of the central bank, are those top 5 banks that have up to 200 billion. There are 24 banks, and out of this bank, at least 17 of them have very low capital base. So the option of measure that you talk about is very, very likely, just as it happened the other time, even though now the number of banks are fewer and perhaps their overall management of their risk profile is much better. And certainly, because they are fewer, their capital base is comparatively higher than that of in 2005, where you have almost 80 banks. So to answer directly on the measures, yes, there will be measures, because certainly out of those 24 banks, the top 10 banks may probably be able to make it on their own. But the others may likely explore the other options, like downgrading their licenses or coming, we have the various, for commercial bank, you have the ones with international authorization, you have the one with national, then you have the one with regional. So a commercial bank that cannot meet the 50 can at least meet the 200 billion and then operate as a national deposit bank. The one that cannot meet the 200 can meet the 50 and then operate as a regional commercial bank. So that process is an escape route that may not warrant necessarily measures and acquisition, depending on the individual capacity of bank.
Well, anyway, I don't get to meet a head of research team of presidential team on a nightly basis. I'm so excited that you're here. So give us a sense of what you think may have happened or may be happening that we're getting to see the Naira looking a little bit good against foreign currencies.
Well, I want to say that the CBN is doing a lot. Other economic elements that affect the value of the Naira are things like inflation and then the interest rate. Yes, the monetary policy rate has been raised to 24.5, and that automatically means the interest rates are going to go up. Well, in theory, that could attract additional foreign exchange in, at least hot money that is looking for, a better return. However, let me be very specific.
Yeah.
The major source of strengthening the exchange rate of a currency is the supply side. A lot of the steps that have yielded the result for now more on demand management side. So we need more than these steps now. And the Nigerian government has to look at sustainable sources of foreign exchange inflow, especially those sources that can be replicated over time. Take the case of oil. There's a lot of uncertainty surrounding oil because of the energy transition. Then the productive base of the economy is still very shallow. So opportunities for diversification in terms of processing for exports are so limited. So the question is, how do you strengthen the exchange rate of the Naira on a sustainable basis? We have to certainly look at what will give us sustainable supply of foreign exchange rate, or what will help us build up sufficient reserve to stabilize the exchange rate. A lot of some of the initiatives that have been done to stabilize the exchange rate of the Naira now, like I pointed out, are mostly demand management. Even the option of borrowing, like someone suggested, about $31 billion, it's not sustainable. It's not sustainable because this is not a replicable source. It is not a source that Nigeria can leverage to continue to regenerate that flow. So the problem, the fundamental problem now is, how do you reposition or reform the economy structurally, particularly, in such a way that the economy should be able to generate significant inflow of foreign exchange. Of course, I don't want to go into the details, but I just want to bring the specific picture clearly to you. I am not saying what the CBN is doing will not be sustainable, but I know that more needs to be done, because once you are not able to sufficiently address the supply side, it is a matter of time, most especially for an import-dependent economy like Nigeria. What you are seeing now, unless some exceptional reform steps are taken, what you are seeing now may not last too long.
Dr. Justin, I hope we can do this again, because we have to keep talking about our economy, having better understanding, and see how we're doing on a nightly basis, if not weekly.
Thank you very much.
Many thanks for coming on Newsnight.